So, trading friends, here is the first educational video about position sizing, when to set profit target, when to let the profits run, how to size the risk, how to trail the stop, and what amount we better should take at risk in any market. In this market, we are at Ethereum market. I will at the end of the video tell you also what's expecting us on Friday, because very important data, and we have seen after the corrective or correction pullback of Bitcoin, not too much, but Ethereum, Solana, and shortly before the close, the bull trap of NASDAQ, Russell, and S&P 500, and how we could detect that bull run as everybody shortly before the closing price was jumping into that bull trade, and instead we aggressively sold that market. And after the closing bell, as 1 hour later the Asian markets opened, the market collapsed now. And if you look at the prices we see now, Bitcoin is going down currently at about 0.54, because the trading day for crypto is beginning in about 45 minutes. So not exactly at the midnight, but for stocks and other markets. So the S&P started to immediately to sell off from the closing price at the high. So never buy a market if the market closes at high. Never do that, because the market will open lower on the next day, and automatically the market will trap the buyers. At the same time, never sell the market if the closing price is at low. That's the only thing you should know. Everything else about opening and closing price is more narrative. There are few points, 5 or 6 points we need to consider, but they are not so important in this video. In this video, I'm going to show you now a very simple trading strategy you can use today on Friday, but you should use that shortly before the news are coming out. It doesn't matter if the news are positive or negative, but if you watch very considerate through this video, you will have a win rate of over 80%. So today I'm expecting a big volatility of the market, as we are expecting the consumers price index data. Very, very important. If the number is high after the destructive GDP numbers of yesterday, so it should not be too good for the stock market, either for the crypto. On the other side, it can also happen that the market welcomes negative news, because especially in the stock market, they want to have they say if bad news is good, because bad news they interpret now Fed must cut the rates, and those people have never understood Fed does what Fed does. The Federal Reserve does what Federal Reserve does, and the Federal Reserve is dictating where the monetary policy will go, and not the traders, not the investors, none of them. And if you go inside and think about it, then you will be on a very, very good, successful trading period of your trading career, maybe. Therefore, say goodbye to all those hypes. In this strategy you see here, I have only just 3 indicators. The first indicator everybody can use. This is just a simple EMA, or you can put it at SMA. We are here at 30-second time frame, right? 30-second time frame. This can be especially very informative and also useful for trend followers, but also for the day traders, especially for the day traders who want to maintain or work mainly with take profit. As we know that a lot of trading educators are talking, for example, buy here, put your stop here, and your win to loss ratio should be about 2 to 1. Okay, so let's say then they take profit here, then they wait for a period of market, and then the trading system says, okay, buy here, put your stop again here, and then make again 2 to 1. I don't agree with that, because those people suggest and implement that they know what will happen in the future, right? We see, for example, the market is here, and they say, okay, trading signal says buy here, put your stop here, then again 1 to 2. The first question is that I have, what if the market runs much more further? Then you take only this bunch of profit, right? And if you would take also this bunch of profit, it would be maybe then, let's say, it would be this, 1 to 12. And that would be much more greater, right? The second one is if you put your profit targets here. So that way, the market goes here and then collapses you, and you never reach that one. So I don't agree with that strategy for profit target or take profit setting. And also the next failure is that a lot of people use, for example, this swing lows if they are going long, and they are putting their stops here if they are going short. For example, here if they are short, they put the stops here or even here, and we see here the market is running shortly before taking profit. Let's say they put their stops here if they are short, right, and profit targets here, then they wait, the market goes, everybody happy, and then suck, they get hit, and they have missed already to take that profit. That's a very, let's say, I am very kind now, but almost we have seen, especially yesterday, the market doesn't make these predictive moves. It makes these moves, and what will you do then? You just need to do it 3 times, and your account is down in minimum minus 20%, guys, right? So, and there are some traders who never put the stops here. So in this strategy, and what is very important to me, even today, after many years, so many years, my strategy is based on the so-called 99 to 1 rule. So just 2 numbers I concentrate every time. Also, after so many years, 99 to 1 rule. 99 stands for 99% of capital protection. And 1 means look always that there is only 1% risk. Even that can ruin your account, right? So therefore, my strategy is extreme defensive, meaning before we, let's say we want to buy the market here, right? Let's say we want to buy the market here, right? Before we go in the market, we need first of all to know how many percent of our capital we are risking. This is number 1. Number 2 is, where do we set our very hard stop? So number 3 is, when do we trail our stop? meaning the stop is coming to the 0 point or break-even point. Number 4 is how many exits do we have? Do we have only one exit? For example, we put our stop here, and let's say the market comes here and then we get out of the market. Number 5 is, what if the price has reached the stop, the profit target, we are out of the market and we get again another signal. Do we miss that signal? Do we ignore it? Or should we take that signal, and if yes, under which conditions, right? Because sometimes so the market comes back, we get another signal to the other side and the market runs very deep, and that will make us a lot of angry if you say, oh, that amount of potential, because trading is about money, right? So number 6 is at what level we should extend our profits, right? So if, for example, let's say you see, so the market, we are short, the market reaches this level, should we really get off the market, or should we take a part of the profit and then let the market run, and after each level we extend that profit target? And if we do that, how can we know it that the market will go to that direction, right? So that means I have a bunch of profit target settings, extending, taking profit settings, but on the same time to maximum calculate all the time and to maximum protect the account on the other side in case the market is running to the next potential take profit potential and then hits back. At what level we should optimally take the rest of the profit, and of course when to stay out of the market, right? So, and therefore, so I'm going to show you now a method that I was using for many years. In today's world, of course, we have programmed this method, and in digital world, so the computer is just telling us the price and shows us. But many years ago, we needed to make it well by ourselves, and therefore I'm going now to show it to you. So the first indicator we need is this EMA. In this case, we see that the EMA is running or showing upside, and that's for us enough to know, okay, the general or average trend of the market is upside. Now, the second question is, should we take only trades in this direction? Or what happens if, for example, the EMA still is upside, but the market even comes down? And if yes, should we also take a contrarian trade? And then here is the question: how do we manage the risk and the take profit here? And in this scenario, how we are managing the risk and take profit if the market runs in the direction of the trend? And that's very easy to know. So scenario number 1, the trend is up, meaning the average market moves out like this, then we go a little bit higher, then the market makes this move, and then we go higher, right? So on the other side, it can also happen that the market comes down very deep and then it's going higher. So, and therefore we need then this moving average. In this 30-minute chart time frame, so I have set the setup of 1 hourly EMA. So the EMA is 1 hourly, and the setting of itself is 200, right? 200 EMA, but the time frame is 1 hourly. So, and all we need is that, nothing more, nothing less. As trading strategy, you can use any. We can also, for example, use trend lines. Let's say, for example, if the market runs, moves above the trend line, let's for example, right? So we buy and we set the stop, and then we let the market or the price or our position just move with the with the trend, right? But to protect this part of the capital, we don't need to be considered of any, because we estimate that the market runs higher. So we calculate this drawdown. This is the first part, but this is the profit side part. Most importantly, we calculate also the risk, right? Let's say we have put, for example, our stop here. At what level? Let's see, the market is running higher. And then we say, in case the market is going below, we close automatically, immediately the position, because the trade is not working. Also, in the same time, as soon as possible, we trail our stop to break even. We want, in this case, we want to avoid to lose money. And as we can see, for example, later on, the market had a very volatile time, right? If the market is going down, we use the same, but we only work with trailing of the stop and setting take profit if the market is running against the trend. If the market is running with the trend, we don't set any take profit. Our exit will be if the trend changes. That's all. And we only one time trail our stop above the break even, and we'll let the profits run. If the market runs against the trend, we use only take profit, because we know sooner or later that this is a correction. We want to take part or to take advantage of this correction, and sooner or later the market runs again in direction of the trend. All right, so we see here now the market currently is touching sometimes here the EMA is shown long, right? So that means the market will try possibly also to touch this here and offers us possible long signals, right? But what it happens if the market is going back? And to do this, we see here in the past period, this AMA was that way. The market went down, right? And then against the trend, made its correction, and then started to run up in the direction of the trend again, right? All right, and this is a very useful information for us, as we can now use this instrument here, the drawing instrument. We set the low here, right? And then until the time being, so I will draw it here. We see now, first of all, the difference between this low and this high. This is very important for us. We mark it. Because, why do we need it? Because in case the market runs against the trend, it would be a possible pullback, a possible reaction point of the market, right? So, and we do it twice. And the other one, what we need is, we see here after the market came down, at which level has the market start this correction? It was here. and at which market the market decided to go again above that correction. And this is the second very useful information for us, right? So meaning we take it here, and this is the difference, something like that. Yeah, here's the breakout. This is the smallest one, right? All right. This is number one, the levels. Now for position taking. For position size, we need to know, let's say I'm calculating this for $250,000. We need to know first of all which amount of our money we want to risk. As I am very defensive, I am using maximum 0.05%, and we need also this information. The second information what we need is at which so-called true range is the market moving, right? So, and we can measure that by the so-called ATR. You want to look then for ATR, and you want to then download it on your chart time frame. In this case, my indicator automatically is giving the ATR of the last 20 days, meaning the average move of the market is about 199 ticks, right? Meaning the market sometimes made, for example, 500 pips, then 200 pips, then 70 pips, then 150 pips, and the ATR calculates automatically from today until the last period 20 days ago, all the numbers, right? 500 plus 200 plus 70 plus 150 plus every day's range, and dividing it by 20, and this is the number we get out, right? In this case, we have the number of 198. We multiply that number by 2. And by 2 is something about 396, right? So, meaning that the market, for example, if the market coming down, moves itself in this range. If the market is going up, moves itself in this range of maximum from the lowest point to the highest point, 396 points. That's very, very important. All right, now we know the number. We have the number of our risk. This case, 250K. So 1% is $2,500, right? And the half is about 12,050. Yeah, 12,050. And once we have that number, we now know, and then we look at our broker's account and we see, all right, then we use this formula. So the capital account multiplied by 0.05. We can write it on the wall or on a paper or on your desk or whatever, and we divide it by 2n, right? 1n is the average true range of today. So this number, 193. And 2n's are then 386. All right. Now we have this number. We can calculate it. our position. This is very important because there are markets that are running very fast. There are markets which are moving very slowly. And the markets that are running very fast and have these moves, they have a bigger N or bigger ATR, while these markets have lower ATR, and that matters. Why? If you have a market that has extremely very low ATR, we can put more position and let the market run. If we have very fast markets, it would be very stupid and crazy to put a lot of positions, because volatility, the more volatile the market, the higher the risk, right? A lot of people, nearly 99% of people think about taking profit, but nobody takes about this back and this is risk, and that will in just one time, right? You can, for example, have the best trading strategy. 99% of time you have been making profits during the last years. Only 1% risk, big risk, is enough to collapse all your account or to ruin you totally. So therefore we can say also that way we calculate the speed of the market, right? You can, for example, let's say you are in a street, right? You drive your car, and of course your speed in this kind of the street is something different if you have a street like this, right? You can drive with the high speed whatever, but we see here, if you drive very fast in this street, it would be very dangerous, because the risk that your car and you get hurt and make a crash is here much more higher, right? So therefore you need to drive very slowly, right? The same is for the market. A market that moves very fast and has these very big volatilities is like this street or like highway, right? And on the I'm sorry. So if you want to compare the risk, is like this one. And a market that is moving very slowly, has very low ATR, is like this one. And then we can put more positions in a market with lower N, right? So, for example, the N of Bitcoin is about 5,683. If we compare that to Ethereum, we see that Ethereum is slower, right? So now we have compared the N, the formula for position sizing, and now in the last step we can calculate the risk for our first position, first stop. Meaning, if we take a position, the maximum account size is $2,500, and we want to calculate it now by the VIX. See, $250,000 multiplied by 0.05 times by or divided by 298. It gives us now that we can take a maximum position of 31 Ethereum units. 31. But there might be a problem. We go at the broker, so you can choose any, and we see at the broker's account, for full unit of Ethereum, we need to put a margin of $1,400. So for 1, right? That means for 31, we needed a minimum margin of more than $30,000. And we don't want to do it. Why should we do that? We said that our maximum position size should not exceed more than $2,500, meaning maximum lots we take here, maximum lots are 2. And then we will take 2, so we let now, so let's say we wait for the next signal. In this case, my trading signal is giving me a sell position. We sell the position. We open a short. We put our stop somewhere around here, and we need first now to calculate it. That means if I would put my stop here, my maximum risk is 2,500, right? And in this case, in this backtesting, of course, the numbers are not correct, right? So because any broker has another prices, but to make it now clear, we see, all right? The maximum number, and we are on a very low time frame, 30 seconds. So the margin we have put is $2,500. The risk we take, maximum risk allowed, is $2,500 multiplied by 0.03. So again, $2,500. These are our 2 units multiplied by 0.03. That's about $75. And we see here is the risk. All right, so this is the first step we do. Step number 2 is, now we can use, like other people say, for example, we put the position here, so this is our stop, and then we calculate at which level we have a 1, 2, 2, right? So that would be something about here. All right. And now we have been calculating this difference of the high and low. We put it at our entry. You see here this one. And the next one, this one here, we put also above our entry, and that's now very important because it is possible that the market comes here to reach these levels and goes up again. That means it never touches our set standard take profit. It can also be possible that it concurs, reaches this level, and also extends itself and goes beyond this level. And this is very important for us because we want then to trail our stop as soon as possible to break even. But on the same time, this level is very important for us. In case the market comes to that level, we will take 50% of the positions out with profit and let the rest run. And we need to know how far we can let the market run, right? So this is very important. The next rule what we have is, if the market reaches the 2% level, right? The 2% level. If the market reaches 0.0, 0.25, 0.5, 0.25, 0.5, 1, 1.5, and then at least 2. This is a signal for us. If the market moves to that 0.2 level, we immediately trail our stop below or at our selling price, because it can happen that the market runs higher. If this happens, we have not making profits, but we have not lost nothing. So meaning the market has trapped us and then wanna go higher. And it is of course possible today. That's very important. On the same time, the market can fall very deep, set all the stops. So we don't set a take profit here actively, but we keep it monitoring, and the take profit is only in or on our minds, right? So let's see together. To compare this, I take also this one. So we see now the market has received this level, and the first step is we trail our stop to our entry. And just watch these levels we have been calculating at the beginning, right? The price is now here, and the first target is here. So, gotta see that. So that's this amount, and now it's time to trail our stop. As I said, if we hit then that level, we move the stop 0.5% down. It will be something about here, and to calculate that, therefore I have been mentioning it, so it would be then something around here. Now we trail the stop here. So the stop is protected by these lows. It can happen that the market comes up and then rejects back. It can also happen that the market comes up, rejects back, and goes through. But whatever happens, our position is now well protected, right? Because we have now the first part, 99% protection. There is only 1% protection that the market moves very fast, and this cannot be liquidated, right? There is always the risk. So, and we see here this target has been hit, and now the second target is the standard, right? 1 to 2, what everybody's talking, social media, or people tell you, put always your take profit at 2 to 1 or whatever. Right. Okay. And remember, this is a trade against the trend, right? So the trend is up. Trend is up, right? So we see here the EMA is up. This trade is against the trend. Therefore, we are calculating maximum risk protection and also levels where we want to take the maximum potential profit. So has it been hit? Yeah, nearly. So one around, not completely. We wait if the two level, so this level is 2, is this take profit has been hit, right? The price must come here. We move our stop to minus 1.5 to 0.5, right? And we continue this. So we are taking the trend again, the anti or against the trend trade, and this is our short entry. We have moved our trading stop here, and our intention is to move that trading stop as long as possible. Oh, I did a mistake here, I'm sorry. So we said, if you remember, if we have reached this point, we take 50% of the trades away in this case because we have 2 units. So we take out 1 with profit. Now we have 1 unit only and we are trailing that amount. So we have taken 50% profit. Now we see that our take profit, the standard one, has hit, and this is time for us. Now we can calculate if this is 2, then at around 0.5 will be here. So we trail the stop a little bit more now to the downwards, right? So, but look now, because we have now trailed the stop at the beginning, our risk to reward ratio was 1 to 2, but as we stay now in the market and we have trailed our stop already, we see that we have now a reward to risk ratio. If our risk is 1, our reward ratio until this moment is 80, right? Got it? How we can minimize the risk in trading even in volatile markets and increase our potential profit potential, right? Okay, we see now this is the point where a lot of people have taken profit, but I let the profit open, the market still is here, right? All right, so now a lot of people say buy, or take profit and buy, the market will go up. But I want to show you which traps are existing here, and we are trying to take profit out of those traps, right? And also the people lose their money. Well, everybody is responsible for its own trade. And in this case, we have then 82.76. So we trade that here too. Let's say 80 minus 1.5 is 77.5. That means now, so I can use this 70, so a little bit less. So that means now we trail our stop from here to here, this area. Okay, so now the other position we see, so something around here. And now we see if this level we have been calculating can be hit, yes or no. So we see here. And then we wait, first of all, the stop must be hit, and then secondly is at which level, for example, we use just trend lines, whatever, said the market must come up, makes a pullback, higher highs, higher lows, and this will be, for example, where we can go long in direction of the trend, right? A lot of people, of course, take too soon. In this case, for example, if they take too soon the profits here and buy, that's okay, why not? But well, this is something then very subjective, right? What we do is just following very objective and free of any emotions kind of trading, and therefore emotions are not allowed in this trading system, what I cannot recommend highly. Whatever happens, we see that at the beginning we had two positions. One we have with profit. Position number 2 is also now our stop loss at the beginning. We have been trailing to that level. If the market hits, all right, it doesn't matter if we give it away, right? Because from here to here we had one profit, and from here to here, and if we set those together, right, position 1, position 2, close with profit, we see that we have at the end taken the full amount of the trend. So don't fall into that trap. Everybody tries to get in here to leave here, and that's the most trap here, right? And the last rule is, if we get a buy signal, let's say here for example, a buy signal that the market goes up, we don't wait until the market reaches our trading stop. We immediately close the position, we wait for confirmation, and then we take a buy position, and again the same calculation, but in the other direction. So, but the difference is this time we put the stop, we calculate it, we calculate again the current ATR, right? Maybe the account has been reasoned and we can put 3 units. So it should not exceed $2,500. With the difference, if the market is rising up, as soon as we reach the next level, we trail our stop and we let the stop be there. So that means we don't need this take profits anything, because now we are trading in direction of the trend. All right. So you see, also for a very big account, the billionaires, the millionaires, they make some couple of thousands every day. That means they lose very, very small. Right? Even if they lose 1,000, they make 20K, for example. If they lose, they make 2K, they lose $100 or $200 or even $300, right? So, and this matters. So that means we keep all the time the losses very, very small. And you see now, people who have been trapped here, the buyers, say, yes, support has been reached, right? Buy here, and they have been profit, the market came here, and they were, and then sucked the market out. Have you seen how fast the market goes against them? Therefore, avoid to trade that way. Wait for your signals. And then wait for the confirmation. You see how much deeper? And at the beginning, if you remember, I have calculated these levels too, right? You see? So we can of course go further and calculate this level too, but I put it with this one. And this is the way I was trading for more than 20 years. Before then I started then to write the formulas to make indicators that are calculating all these levels perfectly. So it made a lot of fun to me, because you need to think, not just taking a trade, and that will help you, motivate you to think about the market, to think about the price, to think about the risk. And we did it all the time on the paper, on the paper, on the paper, on the paper, different scenarios like this, right? And the accuracy of this system to reach the levels is unbelievable. So more than 95%. And we see our profit still now is here. Now we want to trail the stop, of course. So let's see, we are here 74, and at this level now we have a reward to risk of 446. So the other one have 122. Ours is 1 to 400, let's say 60. And then if we move it, so it would be something about here. We can trail or stop. Then the market goes deeper, and we are trading against the trend, guys. So again, we trade something about here, trail it. Because see that around this one position from here, still now here, Meaning if the market is coming back here, all the other people have been trapped, right? Who is telling you, buy here, it will go to 100K, buy here. They are all in loss. So you can see it here. They are all losing money, right? But we, because we have a strategy, a solid strategy, and our strategy is extremely defensive, right? That means our defense line is just near of perfect. Along with one position, right? So made only one position made now more than 938, I guess. So it's very small. Then the market holds back and we are out of the market. And then we wait until we get, because we know on lower time frames, we know that the trend is up. Sooner or later the market will turn, and now we wait for a buying signal. For example, trend line, the market must do this. We go long, for example, right? So well, let's say now how my indicator is working. So, and the market then will make this move, and then somewhere here, I think it was the buy signal of yesterday, and then it goes in minimum. Then that's the next problem what a lot of people have. They set the stop here and they sell the market back again, guys. That's really stupid. If you have a trade in direction of the trend, let it run. It has a reason that the market is going back into its previous original trend trade, right? Let's say, for example, we buy something about here or here, right? Then we calculate again. So one contract or one full size is $1,400, right? If you have, for example, $1,000, then you must use, I think, 0.01 units, and you need to calculate it, right? So, but you see, even with a big capital, right? There are, for example, what I have profit, right? And we have also a strategy, let the profits get bigger, growing the profit if we trade in the direction of the trend. So, but I hope you got the idea. Now we'll look what happened to crypto. So, and we see here in Ethereum, right? So I was selling the market somewhere around here, but we see then after yesterday or shortly before close, this is the last hype move of crypto, of Ethereum in this case. So this was something about my last video, and then the market went higher, but I saw here, okay, the moving average, you see here, it is going down, so the market will go down again. So then we took also some, just for fun, some anti or against the trend trades, but this time we bought, we trailed the stop higher with take profit, and somewhere here, I guess, here was it, somewhere here was it, I'm sorry. So we trailed the stop to that level, And then as the market went higher, so we have been waiting until we get a new signal to short, and then we shorted the market, and now we are in direction of the trend, meaning our stop is holding here. We don't trail that, right? Because the probability that the market is going higher, lower, is more than it's coming back. Why? Because the Asia opened, so it was the closing price of yesterday, it is the open price of today. The market went a little bit higher, and then since then the market coming down. Why? Because we are expecting very important data today, so the CPI very important, and the market is still shocked. So we see here in Bitcoin, very good. So conclusion, you see the EMA all the time down, and we knew exactly in Bitcoin. So I have just another positions because I have been selling Bitcoins much more higher, and I'm trading Bitcoin on higher time frames. But we have seen everybody, yeah, now we go to 80K next week, we are 200K, the same story all the time again, guys. But you see here, right? This was a counter trade, right? Let's say, for example, here, you have been seeing that from here, the market going higher, you buy, you calculate positions, you buy, then must calculate how much risk you have been taken or whatever. In worst case, you put your stop here, right? Then after some period of time, then you take 50% out of the market, right? And then you trail immediately your stop and so on. And you see here in this market, the volatility is very high, guys. So, right? This is what I wanted to show you. You see here, see these spikes. Gotta see here how big the market comes down and falls again deeper, right? So we have bunch of broadening patterns, meaning a big fight here makes a new high and then makes again a new low. And this is exactly like this street. Right? Bitcoin is like this. If you want to drive very fast, you get crashed here. So therefore, in Bitcoin, you should put less position, and therefore you need to calculate it, right? So let's see what Solana is doing. See Solana, I like Solana very well. It's very easy market to trade because it's a training market, but we see also since weeks we have very high volatility here, right? So in Solana, therefore in Solana, for example, I can recommend take only trades in direction of the trend, right? If you want, for example, to go counter trade, right, then maybe then you put here, and then you take the profit here, then you see, oh, the market running here, then you read in the chat, you put it here, right, and then the market running against you, right? So in Solana, because the move of Solana is very, very fast, sometimes faster than in Bitcoin, right? Then we see how the gold market, for example. So we gotta see here. So gold market trend is of course up, right? Even the market is down here. We could, for example, take a short here, and we know we take this short against the trend. How should we? Which strategy should we use? Of course, trading stop in direction of the profit target, right? Very good. We can calculate all this, right? So we put it here, for example, right? We see, for example, these are the levels, possible levels, right? Gold can be trailed down here, and why not, right? And once gold is reaching that level at around 2,300, something like that, it is possible that it takes a pullback. and then we can trade in direction of the trend. But don't make the mistake once you are in a trend. Have a look always on your EMA, because it can happen once you are here and you concentrate yourself to take a buy, then the EMA starts to look down, guys. That means you take the trade, you haven't been watching in direction of the EMA, and in your mind you're okay, we are trading in trend's direction, but in reality this trend is now again, it was a counter trend, and now it is again a counter trade, meaning then you should then trail your stops and then wait for a new buy signal, right? So it's very, very important. Always keep attention. Then oil very nicely. So during the last week we had a lot of fun with counter trades, but on the same time also with our longs that are currently in direction of the trend, meaning that the trend is holding now higher. So meaning if we get, for example, a sell signal, right, we could also take on the same time, if we hedge the account, we hold the buys, we take the counter trade, how far it might goes, right, and we take this amount of profit potential, and then we can, for example, add another buy here, right? That means on the same time we have a position in the market, we can also open a counter trade if we have, for example, some very important events like war or whatever. If you are short, let's say, in this case war is good for oil, but if you have, for example, bad economic data for oil, so we can, and we expect that oil for a short time is coming down, then we can of course open on the same time. We let the position here open, right? So we have all the oil stop in case the market runs again. Doesn't matter, because we have not taken that profit, but instead we have taken that profit. And it can also happen that this profit goes so deep that the trend changes into a short trade, and so it would be a nice entry, right, in direction of the trend. All right, and anything else? S&P. So at the beginning here, the counter trend, and we see now the EMA at the time here because of this fast move, right? But the longer time the market is going down and it's trapping, we see now the EMA is looking sideways. Now in this time we can say we have a range, meaning then S&P is ranging, and if today the data are very bad and it goes down, then the EMA again will go down. This is the 1 hour EMA, of course, on low time frame, but it should be enough, right, for today's market. So what can you do? You can, for example, wait your time, even don't trade at this moment, see if the market is coming here. Maybe we have then a bunch of consolidation here, right? And as I told you, then shortly before the news come out, the market does nothing, right? And then you see the news release, and then you see it can happen. The market makes the first move here, or the first move this side. Don't do anything. If the news coming out, the first move are always the algos, the algorithms, right? And They are scalping before trapping you. Even the date of wars, like this one, was an algo move before the close of the price. The price moves higher, everybody buys, and then falls deeper. It can also happen, the price drives fast very down, everybody's selling, and then going higher and trapping the sellers. So wait for that. Make your strategy for both sides. Look at the EMA. The probability that the algos will trap you even 1, 2, or 3 times is very high. Why? Because now we are in a sideways market. Okay, so if you see until that time the EMA changing, because EMA is the average price, and if the EMA is changing its direction, better you wait your time, even if you see, for example, the market coming down, right? So, and the algos can move until a certain limit, but in a very certain period of time, between 10 seconds and 2 minutes, right? But not about it, because there's no scalping anymore. The market will draw higher, and then slowing down, and then get down. And this is exactly your time. If the trend is down or will be down at that moment, you wait. You avoid to take buys here. You wait only for such a situation, right? You see the speed is going back, the ATR is going down, the VIX is coming up, right? And then you jump into the trade. Before that, you make your calculations, position sizing, your risk calculation, and you let then the market will move like here, because we have also big participants, guys, right? So they want S&P higher, so a lot of trap there. You see, so the market coming down, and very slowly then makes this move, and then coming down, makes this move, coming down, and then falls down, right? So the other side can also happen. That's the reason that we are trying to avoid, or not to avoid, but to calculate risk 100% of time, on the same time, to protect the account as long as we can, as much as we can, right? And if you concentrate yourself on risk management, right, then the market gives you the profits. Instead that everyone or 99% concentrate on this one but forget this one, you should concentrate yourself all the time to this one. And the market does its job and will give you this. Sometimes less, sometimes more, sometimes a lot, very, very much. Okay, that you can trust your eyes on profits you have made. And that not with big profit, just with small profits, calculated profits. Very well calculated profits, right? You don't put 50% of your account size in the market. This is not good, right? If this is your account, you take only this piece. You take only this piece of your account and you put it in the market, and you watch 100% if everything is safe, and all the time you determine your risk. All the time, every trade after trade, every day, every time, again and again. Once you heard one of these rules, I guarantee you sooner or later, it doesn't take very long that you will lose a lot of your money or your account. And this is something, but I haven't seen anyone who is talking so closely about the risk management at all. They are talking about risk, but not so closely I am talking. So I hope you have liked this video, guys. Trading, if you do it the right way, imagine you are doing it for a long time, guys, right? All the Lamborghinis, beautiful houses, or world traveling, right? Beautiful people you meet, or the money you need for that, you can earn in trading. But as I told you, if you do it the wrong way, you will lose 100%, right? And if you do it with plan, it's like a marathon for a very, 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 very long time. You are in this marathon, right, for many weeks, for many years, and you will have a lot of fun. And the best thing is you make also a lot of money. Okay? So keep care of yourself, keep care of your account, stay healthy, stay motivated, and try to practice discipline and practice patience, as patience is very, very good attitude and positive attitude that will help you to find and to take those high quality trades, and not every trade, but those high quality trades that have the best edges and the highest probabilities to make you richer. Okay, guys? Then have a good day.